Good afternoon, ladies and gentlemen. My name's Tony Bevilacqua. I work with Sprott Asset Management. Pleased to welcome Homeland Uranium, just recently IPO'd this year, and they are located in the United States here in Colorado, which I find particularly interesting, given the current administration. Should potentially give them a bit of a tailwind and also reduce geopolitical risk, which you will be exposed to in other areas of the world. So without further ado, Roger Lemaitre, thank you.
Hey, thank you very much. I know what I stand between either you and beer or you and freedom. So I appreciate you coming here late in the day, especially on the third day of the conference. I'd love to talk to you about our company. We're a brand new company. If you've never heard of us before, I'm not surprised. We are 3 or 4 months old today, and we'll be trading for 4 months next week. So we're a very, very new company, but I like to think we're on the fast track, and everyone will tell you that, but as we walk through a little bit about what we're doing, we're considered an exploration company today, but I would say that a year from now we're going to be an advanced developer, and we'll see why. And of course, I will make a guarantee, and hopefully don't get Rick upset. If you can pick the 71st word in that statement, you get 50 more points on the treasure hunt. Okay, no? Okay. Sorry, pardon me? I'll have to check because I don't know what the 72nd word is. Things about us. Obviously, being a uranium company in the U.S. with resources is a substantial advantage. In my 25-year career, I spent time at Cameco. I ran a company called UEX that we managed to double its size and quadruple its market cap. I've never seen uranium in the nuclear industry anywhere close to being this exciting. Things that happened last week in the Middle East would have cratered the industry 10 years ago, would have cut equities in half. The positive sentiment around nuclear, either from a clean air energy or global security concerns, is unprecedented. Our company, even though we're brand new, we're inheriting a substantial resource in a historical sense that we just have to convert over. We were able to raise $16 million Canadian in our initial financing. So it puts us in a 2-year window where we don't have to do a whole lot. Our board and management team is exceptional. In fact, I would say that I don't deserve to have a board of this kind of bench strength at a company that has a 30 million / 22 million US market cap. And for anyone getting in today, you're in a really attractive spot, and I'll try to show the story. Our market cap is, everything in the uranium sector, certainly in the last couple of weeks, has been up and down, left and right, pretty volatile. But we're in that 30 million market cap, $25 million sort of US market cap. We're very, very nicely, we've got a good trading volume. Our market cap per pound valuation is about 89 cents Canadian, or about 60 cents, 62 cents American. We're still a relatively small company, but with a lot of cash. I could spend the next 3 hours talking to you about the uranium space. If you saw Scott Melby, he's the world's expert, no doubt. I love Scott. But whether you're a clean energy person, whether you're seeing, there's been some crazy claims made by governments, whether you're one of the 31 that are going to triple nuclear capacity, we're seeing never seen more reactors under construction since the 1970s. And what I see to be a geopolitical shift in the uranium space, it's a unique time to be in the uranium space. Public acceptance has never been higher. Everyone, of course, knows about the data center thing. It's going to create an interesting dynamic, particularly here in the United States, about who gets energy if we don't build enough of these nuclear reactors. The presidential targets, you've heard more about this, and I don't want to spend a lot of time on it, but there are a lot of interesting stats here in the United States. 1 in 10 Americans gets their electricity from uranium derived from Niger, Kazakhstan, Uzbekistan, or Russia. And whether that's sustainable, that is a question tomorrow. And I think really quite shocking for me, being a long-time person who's been around the industry, is the IAEA shift this year. They've always told the utilities in the world there's more than enough uranium to go around. Don't worry, everything's great. And there's some truth to that if you don't worry about economics. They've actually finally said, oh my goodness, we don't have enough to meet the current demand. And if whether you believe that everyone's going to quadruple or double their space, even if they do 25% of world, like their objectives increasing capacity, we're in a critical shortage of uranium, and it is unavoidable. And, everyone watches the spot price, and it's the only thing we all can see. But those who subscribe to some of the trade tech or trade industry magazines get to see some of the other things. It's highly volatile, as you've seen. We've seen the spot price do all sorts of weird things in the last little while. And while people go, ooh, that's crazy, the last 12 months, all we've seen in the last 12 months is what I call the coiling of a spring. Your industry utilities take about 3 years to take a barrel of yellow cake and turn it into fuel pellets. And so that's a working inventory. And over the last year, when our market's in backwardation like it was from May 2024, or whether it's the uncertainty that came related to what's happening if you're a utility, where do I source my uranium going forward, because we don't know what tariffs are going to be in place, who I can talk to and who are not. Basically, have taken a year out of that procurement cycle, and you could argue one way or the other whether that's how that's going to happen. But undoubtedly, demand's going to be coiled up, because the one thing you can guarantee is that utilities have not finished their procurement cycle, and you can see it because there's clear forward-looking indicators in this industry, but not everyone can see them if you don't subscribe to those things. And that's conversion in utilities. Uranium's mined, it converts, it moves over, it gets converted into fuel pellet, it works from left to right on that bottom right left-hand corner there. But the utilities work backwards down the cycle. They don't want to buy uranium until they know they can buy conversion and enrichment, and they'll even short-circuit the cycle by buying those products, UF6 and UEP. Well, conversion, enrichment, UEP, UF6 prices are at all-time highs, and they haven't come down. Even though the spot price came down, then the term price is still going up. It tells you that they're not done with procurement. So there's going to be movement in this price. With that, I can talk for hours on it. I'll have a good question and answer period at the end. I'll talk a little bit about Homeland. Like I said, we're a new company. We picked this property up here we started a deal in August, and we were able to close it and get on the Toronto Stock Exchange venture market in March. We're now on the as of 2 weeks ago, on the OTCQB, and we trade overseas in Frankfurt as well. We picked up 33,000 acres of land in northwestern Colorado, just about 10 miles south of a former producer called Maybell that produced in the 1970s and 80s and a little bit in the 50s and 60s. These were explored by world-class uranium companies back in the day, the Redwash by Uranga Shell Shaft, and particularly the one that we're going to talk about the most, Coyote Basin in the east. Coyote Basin is the project that has significant historical resources on it. Western Mining is probably the world's best explorer in all time. They've claimed to have found 35 million pounds here, 2.2% uranium. So it's about an average grade deposit, maybe a little higher grade than you'd see in the United States. It's within 250 feet of surface, so it's open pittable, and it's 4 different horizons. We've been out in the field in the last month trying to make sure that what Western Mining did is what actually happened. We've been out there proving where those horizons outcrop on surface. We've been out there proving where they found uranium-bearing rocks. We're finding least anomalous radioactivity in the ground. That's been very successful. But what the value proposition of our company is this slide. This is, you can see there's a red, magenta, and orangey yellow little polygons up there on the screen. That's where Western Mining said there's uranium mineralization down to a depth of 250 feet. So what that does is gives us a potential outline for where pits could end up being. Our job, because the resource cannot be converted over to modern techniques today based on the age of the data and the fact that we can't validate some of the assays and such, is to go out there and to do a little regular drill program to prove up those 3 different sorts of pods and put that 35 million pounds into current resources. We have a plan to do that. We're planning to start that in September. Yesterday we filed our permit application with the BLM. This is all BLM lands that we're sitting on here as well. And it's a question of going out. It's not a question of is there uranium there? It's a question of how much uranium is there and exactly where the high grades are. So when it comes to, if you're looking at a grassroots explorer with very little upside or downside risk from a technical point of view, this is about as easy as it gets. this is kind of what the ground looks like. And our fellow is out in the field here. He's actually taking samples of gravelly up, broken up rock that he found was anomalous in uranium. So it's not actually can we do it, it's if we can do it. One of the things that's unique about us, so this is not going to be an ISR mine. We're above the water table here. So this is going to be conventional mine, but unique about this compared to other conventional mines, open pittable. And we're going to look at this in a way to make, we got to be in the low cost half of the uranium supply curve to be competitive. Open pit, and we're going to look at doing a heap leach recovery. Heap leach has been done in the United States back in the 1970s. It's done all over the world today. But we've never brought this technology, the technology since 1979 back. Heap leaches had seen a lot of innovations in the last 50 years. We're going to see if we can apply it here. We'll do some part with this program that we're going to do this year in September. We will do some heap leach testing. It's one of the first steps of 5 to get us to the finish line. We'll see if it's heap leach amenable by doing some bottle roll, column leach tests. And if we can, that'll significantly reduce costs when we go forward in the study phase. Now, and our other advantage, just to mention, is we're looking at, well, I'll mention it when we go to the next slide. Our Red Wash project is pure grassroots, and I don't really want to bore you with that today because we're going to do some mapping prospect. It's not going to drive investor interest in the short term, but it just tells you we've covered more of the favorable stratigraphy in the district. This is the next thing I want you to look at. On the left are all the resources in our peer companies, whether they be producers or explorer developers like us. And you can see we're pretty significant in terms of the size. Our difference compared to the peers in the explorer and developer case is that we're one single deposit in one single jurisdiction, whereas our peer companies are going to be 4, 5, 6 deposits in 2, 3, 4 jurisdictions. So there's a substantial advantage when it comes to capital, permitting, and in terms of contracting uranium, because you can look at a long-term mine that's 10 plus years versus a bunch of 3-4 year long mines, and that has some substantial advantages. But on the right-hand side is the market cap per pound, and our peer companies in the explorer developer category, they have a few pounds in 43-101 resources, but the bulk of them are historic, so they're very similar to where we are today. And so by getting our story out and doing the work on the ground with our 50 to 70 hole, 33,000 foot drill program that we have planned to do before year end starting in September, we should be at least get to an inferred resource. And when we get there and do that work with the heap leaching first steps, we'll know whether this is a project we need to go forward with on improving the resource to indicated stage and doing engineering studies. So it creates a unique value, our proposition. We have an excellent team that's got a lot of experience. I've been in the uranium industry with Cameco and in UEX for 25 years. Our board, led by Eugene McBurney, should be sitting on a $300 million market cap company, not a $30 million market cap company. It tells you how they feel about what we're doing. And like I said, I would like to open up more to questions about whatever it's on your mind, but those are the key things about us. We're focused in the U.S. where there's basically, I think if you can build it economically, there's going to be a market for what you do. Global acceptance has never been higher. Large resource, strong management team, and we're well financed to take it through to that engineering study phase. So with that, I'll open up to questions. Oh, sorry, yeah, it's, I don't know, I just used to think in 35. It's 35, it's almost 9 million short tons at 0.2% uranium and 0.1% vanadium. That's what the historical number has, yes.
For long term, what mill would you use?
I would like to use none of them. Okay, so, and I don't think we're going to build a conventional mill. I think that would be ridiculous. So will we use one of those mills? Possibly. But I think there's an economic case, if it heap leaches appropriately, then we would be able to do an ion exchange like the ISR mines do to recover it, and then we can either chip those resins to other ISR mills or recover it ourselves, and that will be a capital market or a capital expenditure decision when the time comes. We are 100%, oh sorry, I'd be careful. We are on almost 100% BLM land on County Basin. We have 3 Colorado state leases. And then everything that's to the east of our land is private lands. Sorry.
What does BLM stand for in this instance?
Bureau of Land Management, so the federal agency.
More sense than more of a
Fine, no problem. We're in the very northwestern part of Colorado. If you're familiar with the state, and there's Dinosaur Monument, which is up in that very northeast corner. We're south of that by the minimum of 20 miles, as much as 50, depending where you are. We're also south. The water flow of all streams that are there flow away from Dinosaur Monument through our property to the south. So those water issues shouldn't be an issue with the park itself. And we're 10 miles from the Utah border. Excuse me, about 30 miles east of Vernal. Yeah. And just north of Rangeley. If you're a Colorado guy, you know where Rangeley is then. Yeah. There's a lot of small deposits. I think if we can prove this 35 million pounds, it would be one of the largest known deposits in the United States, particularly in the conventional side. Our goal as a company is to see a deposit that has a 10-year mine life. And the idea about a 10-year mine life is it allows you, one, to scale up and down appropriate for whatever the market can dictate, and it allows you to look at contracting opportunities that others that have a 2-3 year mine life can't accomplish. So we're looking at 10-year mine lives. We're also going to be looking at opportunities to grow through M&A, but they have to fit that criteria. Well, I would assume it's not going to be 3.5 million pounds. Even if it was 2, it could be, maybe it's a 15-year mine life, but has a minimum of 10 years. Maybe that's correct. That was really interesting. I had, after selling the UX to Uranium Energy Corp., I did some consulting and some other work with a merchant bank and dabbled in other things, including uranium. And I wanted to get back in the space, and I got introduced to an individual who was representing a consortium who had staked this land. And when he told it, he said, I got this property, it's got 35 million pounds in the United States. And I kind of went, are you kidding? I would have heard of this. And so I thought he was full of crap, to be honest with you. And so he showed me the process he went through, and he went through old SEC filings in the last uranium cycle, and he went to Energy Metals, and Energy Metals picked up this land from my staking back in 2005. And because Energy Metals got flipped into Uranium One, and then Uranium went to the Russians, nothing was ever done on the property and was allowed to lapse. But we were able to trace back the work that number that came out of the Energy Metals SEC back to some of the websites like the Diggers, and acquired the data set, and we were able to say, yeah, we actually got this particular land package. And it was staked, and I hate to say it, it was staked in August, or sorry, it was staked in June and located in August. So it was amazing that it was even open for stake, and that was the other part I went like, this isn't real, it can't be real, no one will let this open. But it was really good work by the vendors, I'm not going to lie. So maybe we'll all go looking through some more SEC filings to see who's been left open. Yes, sir. Yeah, I think there's a fundamental difference between this cycle and last cycle. Last cycle, we were in a flat demand growth market or moderate growth market, like just a very small growth market. So we were at 160 million pounds of uranium per year being consumed. It was growing at about 1 or 2%. China came in and caused that spike to happen by starting the reactor program and trying to procure probably too much too quickly. But at the same time, Kazakhstan in 2003 produced 5 million pounds a year. And now they're producing 55. So any slack that was in the space there needed for growth of the industry was taken up in Kazakhstan. You look today, Kazakhstan really can't grow any faster or any more than it is today. And yet we're seeing, if you believe that the U.S. is going to quadruple nuclear energy production by 2050, well, that's up to debate. If do they add 20%? Do they add 50%? Does the rest of the world add the same? That's substantial growth in the sector. And the difference between this cycle and last cycle is that anybody who put uranium in their name could raise money to do work. This time around, if you don't have resources, you can't. It's very difficult to raise money. One of the reasons why I wanted to be in a company that had potential resources. So I do think that the long-term fundamentals behind uranium this time, there is no Kazakhstan, there is no other there's a couple of projects out there, but they're going to replace what's going to be lost through depletion in other mines. So where are we going to get this uranium? And we're not even worrying about SMRs right now. That's a whole nother story. So I do believe if you can build it, especially in the U.S., there will be a buyer, if you can do it economically. I think we're looking at probably somewhere between 100 and 120 holes to be able to make that happen, if it's the style of deposit that we think it is, the carbonaceous trash style. And that first 50 holes, 50 to 70 holes, are going to get us to an inferred stage. And in the Athabasca Basin, some of your issuers can sit there and say, things are tough. I'm going to drill a hole beside my high-grade hole, and I'm going to get another really good number, and the market's going to be excited. I'm not going to lie. We're looking at a 0.2% uranium. If we get a 1%, that'll be great. But you're probably going to get 0.3, 0.4, 0.1. I don't think drilling holes for the sake of drilling holes to make the market excited is going to happen. We'll go to the inferred stage. We'll do that heap leach first stage testing, and if all lines up, we'll go to the indicated stage by drilling another 50 to 70 holes. And you're looking at a 2-year timeline for that. Yeah, so we're going to start in September. We'll have that. It's about a 6-week to 2-month process to get that part done. We'll do the study, and in the spring of next year, we'll go back out again and do more, if it warrants it. Well, 25% of the world's conversion occurs just outside of Toronto in a place called Port Hope, the Cameco's operations. I see Richmond is certainly a challenge, but right now, if you don't get enrichment, what are you going to do with the existing 95 reactors? It's a big challenge. So you are seeing serious movement in the enrichment space. I think with Silex on the horizon, you're seeing Urenco doing some of their stuff with HALEU. And I'm going to have a mind blank, but there was another group there this week that was talking, not Urenco, I can't remember. The U.S. Centrifuge program or product company. They're all starting to build that capacity. So yes, that is by far the biggest challenge is the conversion enrichment, without a doubt. Pardon me? Well, I'm very familiar with it, but I in terms of where they are in terms of meeting commercial production, 1 year away to start building, 2 years away to start building. Somebody else in this room might know more than I do about that. I certainly know the Cameco thinks pretty highly of it. That's for sure, because they're betting on it. Pardon me? Yes. Yes. More so than people believe. Yes, sir.
What about utilities, roads, infrastructure?
Good question. I breezed past that. This project is blessed with great infrastructure. Everyone tells you that, so you take it with a grain of salt. Okay, so we all got great infrastructure. Highway 40, you can barely see it. It runs through the property here. It goes, hopefully you can be able to see that. Oop, of course. Runs across the north end of the property, and you can actually access from about 3 miles from the north end. There's a great BLM trail, number 1509, runs the length of the property and goes to Colorado Highway number 64. Excellent infrastructure. I can drive a pickup truck to every single corner of this property and probably not have to go more than a half mile off a road to drill a hole. Over here in this little pink dot, right there, it's that little gap. There's the Deseronto coal mine. Deseronto provides 10 miles west of Red Wash. There's a Deseronto coal-fired power plant, and the major power line runs right across the north end of the property. Or just off the north end of the property. It was just upgraded last year. Nearest town would be, village would be Dinosaur, but, and it's just off the west edge of Red Wash. Rangeley is sort of the largest, 2,500 people. It's down just at the bottom of that squiggly line that goes red. And it's an oil and gas town. They've been producing out of the Rangeley field for about 85, 90 years now. And actually the production comes right up to the south end of our properties and to the east end of Coyote Basin. So there's very good infrastructure from a mine, or at least from a drilling point of view, in the neighborhood. And in fact, they're actually fracking out on the east side, east of Coyote Basin today. So no more questions? I'd like to thank you really a whole lot for staying at the end of, I know it's a long day to be here to hear our story. I wish you the best of luck with with your investment opportunities, and keep in mind, if you're looking at a lower risk growth story in the commodity space, we're one of the more interesting targets out there because of our shorter time frame to the finish line. And thank you very much.